Big businesses versus Trump's tariffs, who's winning, who's losing. Trump's trade war is flipping the business world on its head. With new tariffs hitting imports from all angles, companies are racing to adjust. Some are investing big in U.S. production, others are shifting overseas, and a few are just trying to stay afloat. Here's what's really going on, broken down by industry. General Motors ditched its 2025 financial forecast and paused a $4 billion stock buyback. Execs say they're staying flexible as auto tariffs create major uncertainty. Stellantis, trading under NYSE as STLA, shut down some plants in Canada and Mexico, laid off 900 U.S. workers, and pulled its annual outlook after a 14% revenue dip. Tariffs are seriously disrupting their North American plans. Ford is extending employee pricing to all customers through July 4th to help with sticker shock. CEO Jim Farley says their U.S. factories give them a leg up, but parts and import costs are still rising. Tesla raised prices in Canada by 13 to 22%, up to 30,000 Canadian dollars per car, after new tariffs kicked in. Canadian sales are already falling thanks to growing anti-U.S. sentiment and fewer EV subsidies. Walmart is taking the hit itself by paying the extra costs on imports rather than raising prices. It's also telling Chinese suppliers to keep the goods coming, betting the tariff fight will cool down. Procter Gamble slashed its sales outlook. Tariffs haven't cost them that much yet, around $100 to $160 million, but inflation and economic uncertainty are making shoppers hesitate. PepsiCo is lowering earnings expectations due to rising supply chain costs and global trade tension. CEO Ramon Laguarta says consumers are being super cautious right now. Kimberly-Clark, listed on NYSE as KMB, expects $300 million in extra costs from tariffs this year. Instead of raising prices on products like Kleenex and Huggies, they're switching suppliers and tightening spending. Levi Strauss isn't panicking, yet. With a global supply network and strong international sales, they think they can weather the storm. But execs say they're watching closely, comparing this to early COVID disruption. Hasbro, listed on NASDAQ as HAS, warned it could lose $300 million due to tariffs on Chinese imports. The toy maker is speeding up a $1 billion cost-cutting plan and looking to move production to cheaper countries like Turkey. VOS Selections Inc. isn't a giant, but this wine and liquor importer is making noise by suing the U.S. government. They argue that Trump's use of emergency powers for tariffs is unconstitutional. Apple Inc., listed on NASDAQ as AAPL, is shipping more iPhones from India instead of China, prepping for possible future tariffs. China's still their main base, but that's slowly changing. Dell Technologies, trading under NYSE as Dell, is pulling back on discounts, making laptops and desktops more expensive. They say tariffs are just another cost, and customers will end up paying it. Thermo Fisher Scientific, with the ticker TMO on NYSE, is investing $2 billion over 4 years to expand U.S. manufacturing. Most of that will go toward new plants and R&D centers to protect against global trade risk. Nvidia, listed on NASDAQ as NVDA, plans to spend a mind-blowing $500 billion building AI and chip infrastructure in the U.S. They're partnering with big names like Foxconn and opening new sites in Arizona and Texas. Caterpillar, trading under NYSE as CAT, expects tariffs to cost up to $350 million this quarter, but is holding off on price increases. They're cutting spending and slowing imports instead. Whirlpool, listed on NYSE as WHR, is all for tariffs. With 80% of its appliances made in the U.S., the company sees this as a chance to outcompete cheaper foreign brands. MP Materials, with the ticker MP on NYSE, stopped exporting rare earth minerals to China and is investing $1 billion to build a fully domestic supply chain. That's a huge move in the world of magnets, tech, and defense materials. U.S. Steel, listed as X on NYSE, might get partially acquired by Japan's Nippon Steel, but it's under review due to national security concerns. Trump has added a 24% tariff on Japanese steel to push for more U.S.-made metal. Boeing, trading under NYSE as BA, is taking hits as China blocks deliveries of new aircraft. Thanks to tariffs and tension, it's become too expensive for Chinese airlines to buy U.S. planes, so Boeing is shipping them back home. Tariffs equal chaos for global business. Companies are cutting costs, moving factories, hiking prices, or investing in the U.S. to survive the shifting rules. Whether this helps U.S. jobs long-term or just makes stuff more expensive is still up for debate. So what does it all mean? Whether you're buying jeans, laptops, or a Tesla, global politics is now baked into the price tag. Companies are adapting fast, but you better believe those costs are coming down the line, maybe right into your wallet. Trade wars aren't just headlines. They're shaping the way your favorite brands operate and what you pay at checkout. So next time you see a price jump, it might not be inflation. It could be a tariff from halfway across the world. Stay sharp. The world's economy just got a lot more real.